Bruce, I was just getting worried.
Worried?
I was getting worried. I seriously was getting worried. Okay, so, hey, Bruce, you cannot stop me. I have your bio here. You see this,
stop you,
buddy?
I'll just keep.
Do you see how long it is?
I'll keep interrupting you.
No, I can ignore you. Trust me. Do not underestimate the value of the female.
You don't want to read. You don't want to read that whole thing.
No, I'm not going to read the whole thing. I bottom-lined it.
All right.
I bottom-lined it. Okay, so Bruce Norris is an active investor, hard money lender, and real estate educator with over 35 years of experience. Bruce, it's been more than 35 years. I know it has.
Yeah, it's close.
More than
40.
Exactly, because I'm 30, and so I know it's a little more than I am, right? More than 2,000 real estate transactions as a buyer, seller, builder, money partner, renowned for his ability to forecast long-term real estate market trends and timing. He put out an amazing report in 1997 called The California Comeback, which was absolutely accurate. And he put out another report in 2006 called The California Crash, which we all know was absolutely accurate. He speaks and debates nationally. He's been a guest speaker on several national associations and real estate clubs. He's met with local and national government officials, including FHA and Fannie Mae, to discuss market solutions and market insights. Literally, guys, in 2006, Bruce Norris was having active conversations with Fannie Mae and trying to work out what needed to happen. He's raised over $860,000. I hear almost $1 million now for charity through your I Survived Real Estate Night. You are the host of the award-winning Norris Group Real Estate Radio podcast. Those who do not listen to it, you very much should. He has Bruce has a way of finding the people that seem to be the most grounded and the most educated and have deep wells of experience in their field. Maybe it's your depth, Bruce, that brings those hosts to your show, but I've always found your show to have deeply valuable information. Yes, Bruce, you rock, but I'm just saying your guests are pretty cool too.
They are exceptionally cool. Thank you.
They are especially cool. And so he's contributed articles to many real estate magazines, including the Business Press, New York Times Magazine, Good Morning America, Los Angeles Times, Fortune Magazine. Do you guys get a sense for the fact that this guy is well listened to and well heeled in real estate, and he is my unofficial mentor, and he's just going to have to deal with that. Hey, Bruce.
Hi, how you doing, Christina?
Good to have you here. So the thing that I'm going to start with is really simple. I have my list of questions here. Right? You can't see them. There they are. There they are. My list of questions. I have my list of questions here. And the whole title of this night is, and I sent you the questions, so you know there's more than just this one. But basically, how is the market going to hold in 2020? That's why we're all here, because we want to hear your opinion on this. I'm going to ask, layers in that. But let's start with that one.
That's not an easy question to answer because it's going to depend on a few things. And sometimes the way I'd like to think about that is I'd like to think about, okay, if I was a buyer or seller of real estate, what would I do? How would I react in this marketplace? Would I be, okay, you know what? I'm just going to leave that space alone. I was going to sell my house, so I'm not going to sell it. I don't even want people in my house. I'm not sure I know the answer to that, because I think we had a podcast that you were on, and this could play out pretty easily if we have one COVID experience. If we have a repeat in the winter, then it's a very different outcome in how we feel. I don't know about you, but I get up and you're just hit with, okay, this isn't normal. I went to get gas this morning in gloves and a mask. And you're constantly reminded that right now life isn't normal. I can go to a gym and work out because I'm one of the 2 people that have keys to a private gym, and no one's allowed to be there. But everywhere you go, you realize it's not normal. So how that impacts real estate, you see the statistics, 50% of listings are pulled by sellers. And they just say, okay, forget it. I don't know how quickly those people want to have people in their house. How do you feel about that? I think that would be a fair question. You know, I mean, does it dawn on you? Well, I don't know if I'm going to do that right now.
I mean, it dawns on me all the time. I'm not going to do that right now. You know, I said earlier in the introduction, you know, my husband's over
Yes.
65 and, you know, we're very, very hesitant. You know, my daughter is having some, you know, her own medical problems right now. So we're really just pulled way back in, and I'm excited because I have you know, I shared with this on the panelists, which is, you know, I have a offer on my, well, I mean, escrow on my last flip here in the California. And
Yeah.
I was just as excited to get a buyer as they were to be able to buy before this coronavirus made it truly like kind of disappear and blow up. And we're in an extended escrow because they wanted to buy it before construction because they wanted to get something to be done. Right. So I'm very pulled back, and it does feel a little like, gee, the whole economy has stopped. And then for how long? And
Yeah.
that's, we're talking to you.
And again, when we were talking a week or so ago, you know, this is very unlike California, typical market having a problem. This is almost like a combination of Grand Junction, Colorado, in the sense that Grand Junction lost an entire business that was important to their economy. Oil shale left the state and they went to 50% vacancy for 2 or 3 years. Well, you know, we've kind of got a job stoppage where who knows where our unemployment's going to land, 15 or 20%. Some of those people, if they're unemployed long enough, will not be making their rent payment or their house payment. So this is an off the charts experience in a sense. You don't have the natural sequence where you go, okay, well, this makes sense. This came out of nowhere, and there's charts and ramifications on it, but it's still, I kind of have a little bit of faith in our resilience, partly because, I mean, haven't lenders already said you can have a moratorium on payments? I don't see a rush to say, oh boy, we get to foreclose on somebody. And typically when you have price damage, you have an inventory that gets glutted with have to sell real estate. Well, 50% of the people just told you, I don't have to sell it, I'll keep it. So, and how long would it take to get a glut of REOs into the marketplace? It would not happen in any short period of time. So I think that's what I'm looking at. If we have a repeat performance of the coronavirus, that's one thing. If it's a one time and it gradually dissipates and we get back to normal and normal gets to progress, then I think we have a better outcome. Your picture went away, by the way. I'm looking at Kurt Karlstrom, not you.
That's okay. Kirk's will go away again pretty soon because
Oh.
it should pop up to whoever's talking.
Okay. Gotcha.
So we already have a loss of employment. I mean, this number came from you of 18 million in the US. UCLA is projecting a loss of employment up to potentially 16% in the second quarter of this year for the state of California. You know, how will this affect rentals, rent prices, occupancy? You know, how is this going to roll out in, like you started to edge onto that, like how's this going to roll out through employment and rentals and the capacity to own a rental unit when your tenants aren't paying rent? Or is that what's going to happen?
It makes sense it's going to happen more often than it would if you had 4% unemployment. That's absolutely true. But how long does it last? How long is the massage therapist not going to be a massage therapist? I mean, there's parts of all of us are going, man, I can't wait to go do something. Now, whatever it is that we can't wait to do, I'm not sure. What if baseball season started? Would you want to go out next week and stand in line with 30 other people to get a hot dog while somebody's coughing and sit next to them in a seat that you're squeezed in between two people that you don't know and people behind you, in front of you? Would you like to go to a casino where you're sitting next to somebody that's coughing and smoking? And so we want to get back to normal, but I think normal might change for a while. And so getting back to your question about jobs. So that person that's a massage therapist are going to have less people think that's a good idea right now. I have a good friend that's in the, for cruises, he books cruises. Can you imagine? He had about 1,000 cancellations in 2 weeks. I mean, this is a guy that's just at his home. This is what he does. He has this gigantic following of seniors, and they want to go on a half a dozen cruises a year if they can. And now they're afraid. So some of those, that's going to have some tailwinds. You know, it's going to take them a while to say, yeah, I'd love to go on a cruise again.
So I'm going to jump to another question I have is, do you feel there's a bifurcation in the effects of the coronavirus? Whether it has to do employment or jobs?
Yeah, of course, that's an interesting question because in location, I think was part of your question. I briefly looked at them and I normally don't, but you are very intelligent in your questions and your responses. And I always find, actually, I love listening to you when we've been on panels. I get a kick out of listening to you because I didn't think, I even wrote a note down, cultivating my being. I like that one. I've never thought of it quite that way. I'm going to have to figure out when I did that.
No, Bruce, you definitely have done that. You've told stories about you cultivating your being. So I'm happy to let you know some of your own stories about that, but another time.
Okay. All right.
Another time. Yeah, for right now, bifurcation, the
Bifurcation.
effects of the coronavirus.
Well, let's ask this question. Would you rather live in New York City next year or someplace with space? Is that what you mean? I think that's going to be a decision that's made. I think one of the reasons I like Florida is they're going to be the recipient of a lot of people decides, you know what, I don't think I want to live in a 20-story building where the only way I can get down is join 20 other people in an elevator and get out on a crowded New York sidewalk, and because there's no other place to go, get on a subway to go to work. You're going to probably think about that on the long term and go, I don't know what percentage of people will change, but some people will say, I have had enough of that. If that's part of what you're saying, absolutely. I think there'll be location winners and location losers. And I think Florida will be one of the winners. Now, what about businesses in Florida? So I could see it getting lots of population, but one of the things that it really has going for it is entertainment. So would you go to Florida and go to Disneyland right away? Probably not. So it'll be interesting to see. You'll have those businesses that'll come back gradually, but you also have ones that will be, well, we won't do that this year, that type of thing. So there's definitely that playing out. Expensive real estate, inexpensive real estate. I'm hoping that interest rates get really where they should be. There's a lot of problems right now with, well, first of all, the margin between the 10-year and the 30-year mortgage is not usually this high. You should be at about 2.7 in a 30-year mortgage. That'd be great, except for you've got a lot of problems, I think, with the funding of the loans. And also you've got people now having moratoriums that's messing up the servicing industry. So there's some ramifications that are making it uncomfortable to want to do large volume of loans, but that would help real estate if you actually had a great interest rate. I was quoted on a 30-year mortgage as a rental property because I knew I was going to be talking to you. And the rate was 4.12% non-owner occupied. I had never seen that interest rate for that. That's a pretty good loan, isn't it? 4.1?
Yeah, I mean, Kirk, would you jump in here for a minute and tell the story that you told me?
Which story is that?
About trying to get lending in Indianapolis on a rental?
Yeah, no, in the last couple of weeks, I get emails, et cetera, from lenders that you could get 4.5% to 5% interest loans on long-term 30-year fixed financing on rental property. And when I started, because I've been moving out there and buying not moving, but I've been buying property out there. And when I went to actually pull the trigger on one of those, they basically said that the secondary market was not open for business, and they're no longer doing those kinds of loans anymore.
And
I don't know if I lost my connection here again.
no, I hear you just fine. Do you hear me? I guess not.
No, we hear you fine.
Hello?
Okay, you hear me? All right. The bifurcation too, what about inventory types? So let's say you're in a condo complex. Would you be more apt to say, I'd rather have a single family house at this point? Probably.
I would. If I could afford it, if I could choose it, I would. If
Yeah.
I was needing to move for my daughter's school or for some reason.
So I think some of that's going to carry over. For how long? You know, it's a good question. Think back on other traumatic things. After 9/11, you know, the airplanes were vacant. Not forever, but they were vacant for a while. So we just got some things that we got to accept a new normal and still do stuff.
So I'm going to push on bifurcation one more time, if I may. One of the bifurcations I've noticed is when I made phone calls in preparation for your town hall meeting, so I could talk on your panel. I had made phone calls to a couple different people in a couple different areas, and what I got was feedback was that in the upper end rental markets, landlords were still getting their rent. In the lower end rental markets, like C's and D's or lower, they were starting to see people not be able to pay rents. Because, you know, I'm the one who talked about Ray Dalio. Ray Dalio talked about it being a balance sheet question, right? It's not just an income question. It's, do you have money sitting in the bank account? Do you have a balance sheet? Just even, you know, $5,000 in cash to support your rent on your apartment.
It's a great point. It's a great point. You find that there's a lot of people that are 30 days away from and when their business gets cut out from under them, even if you're a business owner, what if you're a restaurant owner and that's it? You know, you have to lay off all these people and their waiters and all that. That's the end of their business. Not going to be another waiter for anybody right now. So that income stops. You know, we have an interesting bird's eye view because we deal with, let's say, a property manager, a friend of mine that I work out with. He manages about 1,000 rentals in Riverside. Pretty broad scope of inventory. And I would say, and when I asked him, he said 98.5% paid. 100% of my rentals paid. 100% of my trust deed payments paid. And that's the business of the Norris Group, okay? So that's a fairly good indication. Now, that's the first month that it could have been bad. Let's see month 3 if that changes. You know what? The other thing is, don't you feel that people are getting permission not to pay stuff?
Yes. Yeah.
Yeah, and so that's hard to resist sometimes.
You know, I could make a commentary on human nature and, you know, who would use that as an excuse and who wouldn't use that as an excuse. And yeah, some people would. I've got a client of mine who thought about it as an excuse, but they paid their rent. And that was one of the phone calls I made, was that she was the only one in that fourplex that made her rent payment that month. So.
Wow.
Yeah.
You had 3 people that did not pay.
3 people who did not pay.
And what was their conversation with you about, or was there one?
No, she was a tenant who had talked to the landlord. When she handed over her check, thank you so much. You're the only one who's paid so far.
Okay.
The 5th or the 6th.
Okay.
Right. So I could check in again and find out, you know, now that we're, you know, day 16, have more paid.
Yeah, the balance sheet issue is real for a lot of people, and it's such a short fuse of survivability. I mean, are they 30 days away from being homeless? Yeah, it's quite possible.
So when I enroll that in my mind, part of where I go is bifurcation in asset classes. You know, the single family homes that are more in the CD neighborhoods, the multi-units or the triplexes in the CD neighborhoods. You know, it starts to become a question about, I own a triplex, I don't have people paying me, my balance sheet now starts to be a question. You know, my stepdad used to always tell me, you know, have 6 months worth of supply in the bank, to support your rental properties, not just your personal life, but your rental properties.
I don't know but if you do this, but just because of life, life lessons, I probably am the only person I know that has a credit on their water bill, their gas bill, their electric bill, their HOA. It's just like, I don't have to pay it but once a year, but that's why I do that. I don't have to think about it. And because I've been there having nothing. So you kind of remember that, that phase. But going back to this bifurcation, this is not a surprise. And this, for the last year or two, I was saying you might want to exchange that lousy location rental or something that was better located, because during bad times, those don't do well. And usually you buy them because they are cheap and the cash flow is great. And then California rewards you by tripling it in price. And you keep it until it goes down by half and you get to do the whole thing again. And I like to skip the last part if I can do that.
Right. So somebody's caught me on using a buzzword too often. So bifurcation would mean that there is in effect a bisection between one part of the market and another part of the market. And in this particular conversation, part of what I'm pointing to is in the A and B markets, basically the people that are there only have higher paying jobs. They live in better quality units. They're paying higher rent, but they also have more balance sheet. They have more cash in the bank. They receive more per month in pure pay. And they're also more likely to work from home, in my opinion. I'm stretching into this. They're more likely to work from home in that they have a computer and they can afford the high-speed internet. To give an example, so, some restaurants are closing and firing all their waiters. My sister works for Nationwide. Nationwide bought 20,000 computers and shipped out 20,000 computers so that their employees could work remotely. That was by Nationwide's answer. So they all have jobs. They're working remotely. They have a computer their business has given them. A waiter doesn't have that choice. So when I talk about bifurcation, that's what I'm talking about. One part's going to go one direction, another part's going to go another direction.
Like if you're a Costco or a Stater Brothers, everyone's not eating out, so they're eating lots of groceries. So you're on the other side of that equation.
Exactly. Well, let me grab something from our Q&A over here. We have people who've been posting questions for you, Bruce. So kind of along the concept of bifurcation, I'm snagging this one. Where do you see real estate residential market in the stronger beach cities in California going in the next few months?
The next few months?
That's what they said.
Okay.
Where do you see it going? Where do you see stronger beach cities going?
It depends. Okay, it depends on the price range, right? Because I think if you're over $3 million, I think you got 900 days of average marketing time for a sale. I mean, there's some number, I know in Orange County, I just saw the report, it was a staggering days on market for that inventory. If you're below 1.5, it's a very different story. If you're below 750, it's a completely different story. So the more competition you have, obviously, the softer the market might get. Again, those people, though, usually how many motivated people own a $4 or $5 million house? I guess you could have them, especially if they're specs, which is another thing we talked about, trying not to get to this market with that $3, $4 million spec, but you did it. You're an escrow.
Yeah, I feel lucky. But yeah, I'm not out there fighting, fighting beyond that. So let me.
Not going to buy another one next week.
No, I'm not buying right now in that market. I'm not buying in that price point, but that price point started slipping a year ago. So.
Okay.
So yeah, I'm not buying in that price point. So let me go ahead.
Let me just complete the answer to that. I don't see any major changes for that price range because usually they're owned by people with substance that don't have to do something. When you have problems is when you've got your market filled with lender-owned properties that are high-end. Well, now you have a have-to-sell seller, and the more you have of them, yeah, your price can descend no doubt about it.
Yeah, I think that makes a lot of sense to me. All right, let's do more. What are the best opportunities for real estate investors in multifamily in the CARES Act? Or do you think there will be any opportunities for real estate investment through government stimulus?
The first part of the question for multifamily,
Yeah, what are the best opportunities for real estate investors in multifamily in the CARES Act?
yeah. Multifamily has had a tremendous run, been the smartest inventory probably to own. Part of the reason for that was this gigantic foreclosure chart took millions of people off the you can own house to the you're going to rent house. And that's what happened. Those people that formerly owned could not own, they've been a renter. So I don't know that there's asking an audience of over 400 people this question. I've got in front of an audience that there were so many people, they were lined up on the walls, on the back and the side. I had not seen a crowd like that at the Apartment Owners Association ever. And I had to just smile and go, okay, you guys are either really excited or really afraid. Which one is it? And a little after, and then somebody stood up and said, we want to know if apartment buildings are in bubble territory. And I said, I'm really not an apartment guy, but I'm going to ask you one question and you will tell me. How many of you would buy your apartment building at its current valuation? And it was rolling laughter, which is an acknowledgement that yes, we're in a bubble and we own the hottest thing in the world. Doesn't mean they were a seller, but they realized at that cap rate, yeah, it's pretty crazy number. Well, I don't know, with interest rates being next to nothing, if a cap rate has to be higher than it is. I'm not an apartment, I'm not going to start being an apartment owner now, but I'm sure that people that took the advice of becoming apartment owner 6 years ago should give that realtor a big hug because they've done very well. The CARES Act, I don't know how much impact that's going to have on that. I just don't know.
Okay. The other half of the question was, I thought was really good, was, will there be any opportunities for real estate investing through government stimulus? Are you hearing anything, or are you projecting that there might be some government stimulus that's going to come from this specifically for real estate investors?
I'm hoping, and this may take a while, but Fannie, Freddie, if they go public, I think they'll change their tune toward how many loans you can get as an investor.
Okay.
I think that could probably happen within 12 to 18 months. That would be a big change. I want to just review something. The CARES Act is that giving money to people? I need clarification of what that is. There's two sides of it, or?
I have to confess, I actually don't know. I am simply asking the question from somebody who posted it. So maybe they can post another question and they can describe it more as to what they want to see from that question. Try to get to it later.
I think the CARES Act perhaps is, you've got $600 of unemployment money that's capable of coming from the federal government on top of the state, and also money that goes to some businesses, but maybe I got it wrong. So that's why I wanted to clarify that.
Yeah, stimulus payments from the government. So yeah. Okay.
That would seem like that would support the ability to pay. So that's one of the questions. Let's say that if Aaron got called by somebody saying, my renter isn't paying their payment, his first comment would, have you told them about the CARES Act? He literally has a, what do you call it? He can send them something that said, just click on here and you can read about the CARES Act or listen to it and help their tenant get those checks where they can pay the rent. So yeah, that would be very supportive of somebody paying rent. It's not a little bit of money, $600 a week for a fairly long period of time.
Yeah, again, and maybe specifically in the areas where, I'm the most worried, which is again in the D market, where $600, right? That could be their rent. they could get the $600 could be that rent for the month, and they would still get $600 the next week. So I'm going to go back to one of my questions, which is, so far the CARES Act will only award a forgivable loan in the PP loan. So far the CARES Act, so we got this from Shu in our chat stream. So, and thank you, Anita, earlier for your clarification. So far the CARES Act only will award a forgivable loan in the PP, that's the payroll program. This would only apply to property managers, other than that the tenants get the benefits and hopefully we use it to pay rent. So basically the payroll program is where business owners can apply for payroll support from the government. There's a $10,000 part, and then there's that would be forgiven. And then there's, as long as you prove that you use it specifically for payroll, then there's a chance that the whole loan would be forgiven.
Well,
So
you've got two different programs. The $10,000 part, let's say that's one program. I think that's the EIDL. Okay, the EIDL says, okay, for filling out the application, there's a $10,000, but then if you check further, they've redefined that as if you have 10 people. If you have one person, you have $1,000, that's forgivable.
okay.
You get the loan or you don't get the loan. So it has to do with how many people. The PPP is the one where you have employees and you can get, I think, 10 weeks, 2.5 months of amount of loans. So you give them, the bank, your total expenses that has to do with your paying the people and medical and rent and all that. You add that up. If you get that check and you show proof that you pay that exactly the way you said the bills were, then you will get the 100% of it forgiven. And I think it's at an interest rate of 1% while you have it.
Okay. All right. So again, from the chat. So I believe they're working on making one for builders. The EIDL and the PPP are currently accepting applications. But somebody else also, Lynn, suggests that the SBA loan money ran out today. So they're no longer accepting applications, supposedly.
I did see that. So
see that.
there was a big rush of applications, and I think they may reopen it, but I don't know.
All right. So check the chat stream, guys, because it also says Trump said he's going to refund that, and that the PPP is completely forgivable if more than 70% goes to payroll. All right. So Kirk, do you have a question while you're here?
Yeah, I'm sorry. I've had all kinds of technical issues.
Okay, I'm going to grab you while you're here.
Yeah, thanks. I wanted to ask Bruce, I saw Aaron actually posted this on Facebook about AB 828. That was a potential bill that was going to force landlords to reduce their rents by 25%.
Yeah, that's a good idea. You bet.
Yeah. I don't hear them forcing a reduction in mortgage payments either, though.
No, I mean, that's good old California. I think there's a room somewhere where there's just a think tank that says, how can we take people's stuff? Hey, that's a good idea. Let's try that one, you know. I go speak in Northern California once in a while, and there's in Oakland, they have actually passed one, and it got passed by the public, and it kind of shocked me because it's kind of crazy. You have a vacant piece of land that's apparently not serving the public. You get charged an extra, I think it's $6,000 on top of your property taxes because you're not using it. And why that strikes home is I've got 5 building lots in Menifee that I've owned for a decade, and they don't perk. And the sewer system is just coming in. And if I had to hold those lots over the last decade and pay 5 lots times $6,000, $30,000 for 10 years, I'd have $300,000 in those lots. Mm-hmm. And my lots would have been confiscated a long time ago. They could just have them. And then it dawned on me, oh my God, is that the purpose? Actually, to take that so they could use it for the public good, which whatever that is, affordable housing, whatever. But that's the kind of thing you see this stuff come up, And you go, wow. And I don't know if you can do that any more than California already has before you really have people. I mean, I see people that diehard Californians finally going, you know what? I'm going to get out of here.
Mm-hmm.
It's just, it gets a little scary because you realize, like rent control, we voted against rent control when it was our turn. And apparently that turn didn't matter. It made it in.
Yeah.
We had a panel about, I don't know, about 6 months ago, and it was about legislation. And okay, what trumps what? So public vote said no. What got it to be yes? And what else is possible to say yes to without our permission? That was a very interesting panel. But California, yeah, so they're suggesting 25% rent deduction. Well, what will that ramification be on the payment that the guy, if the owner has a payment he can't make now? Is he going to have a 25% reduction on property taxes?
Mm-hmm.
And it's just, why go to that group and say we're gonna hurt you?
Yeah. No.
It's popular.
Yeah.
That's why.
Yeah.
So just to clarify, the proposal has not passed yet, right? They're just putting it out, AB 828.
Yeah, it's just, but see, what's interesting is who has to pass it? Can that just be proclamated? Gosh, that sounds like a good idea. Yeah, let's do it. So if you and I get to vote on it and we say no, why does it change the possibility that it could be gone forever because rent control was not?
So I'm going to sort of jump off of this. There's a question in the Q&A and there's a question that I have as well, which is, with all the effects for people, rents being frozen, eviction memorandum, renters making up late payments over 1 year, what about these rent control issues? How will they ruin the local economies? How can rent control be quote unquote stopped? Is for everybody else. So my question, let me go back to my question. I was trying to put these two questions together. It's not going to work. So let me go back to my question. With the legislation around rent freezing, eviction memorandums, and renters being able to pay back late rents over a 1 year period, how is that going to affect the value of multifamily? Multifamily has been sort of the cherished child, right? The golden child right now. But how is that going to affect the value for those as units come up? Because there isn't a deep enough pocket holding that building up to be able to survive this.
Well, I think they rightfully would have to be nervous. I would be. It seems like, okay, we own the target properties all of a sudden. So I would be concerned about all this making my property go down in value. And I'm sure, you have somebody that's there that's an apartment expert, and it may be very different. Chris German is a gentleman that we talked to quite a bit about apartments. And I didn't touch bases with him after the first of the month, but I did check and see if there was people that were concerned about getting paid rent, but I haven't checked with him on the legislation. But I would say it has to cause concern because it seems to be, well, wait a minute, I thought I knew the rules of engagement. Doesn't that bother you? It bothers me when somebody says, okay, well, you know what? Property taxes for just this time will be 2%. Well, okay, that's not part of the plan here, So I don't like when that can happen and then it seems to be layered. And so that's what's starting to happen is that you have, okay, let's take away some of the stuff. So, okay, you got a moratorium on rent. You can make it up, 12 months later?
Oh, make it up over 12 months.
And you can't file an eviction. That just seems to give people permission. Now, so if you don't have to make it up for 12 months, what's the likelihood they're going to be there 12 months later? Not so good. Mm-hmm. That's all this lands on the group that probably is rich and it's okay. That's a little scary, way to think. But isn't that the California that we are faced with today? I think we are.
The other thing that they're saying is that for mortgage payments, that there could be forbearance or they're not allowing notice of defaults to be filed. But I was reading some things today saying that may be the case, that they may not allow notice of defaults to happen. So you may not get foreclosed on, but it's still going to impact people's credit if they sign some kind of forbearance thing and push all their payments to the end of the loan. It's still going to crush people's credit.
That's a really good thought, because, and maybe the lender, who's ever in charge of saying maybe there should be a moratorium on having a problem in this time period. Wasn't there some kind of a moratorium, appraisals? Isn't there an appraisal moratorium for 4 months or something? I don't know if that's because they don't physically want the appraisal to be out in the field, or they don't want to look at the comps that are as they exist. I don't know. I think it's probably for location purposes. They didn't want people out in the field. But I think we would do ourselves a favor, like hit the pause button for earnings. So when you qualify for a loan and you normally work 12 months and make X amount of dollars, and this year you work 9 months and made X amount of dollars, like 3/4 of that, do you want to really count that for that's all you make? Or can you use some reasonable common sense and say, next year it's going to be 12 months and not 9? I don't know the answer to that. But we better not say, yeah, all has to be perfectly normal, because guess what? It hasn't been. There's a lot of people that don't have normal income.
So we've got a question over here in the Q&A. So I'm going to rephrase it a little bit. Do you think we're going to get to the point where private passive lenders, you know, when the objection is, okay, you tell your investors, your private lenders, when no one's paying rent right now, or there'll be no returns for an undetermined amount of time, like, are you going to be looking at that? You know, especially people who run syndication deals, who are renting apartments, who aren't having rents come in. Like, what do you tell your passive investors when you say, no one's paying rent right now and there's going to be no end in sight that we know for sure?
You know, there are definitely two, you're talking about my hard money loan business as far as the first
that's what they're trying to point to. I'm just trying to get the question to work.
Okay. So a lot of our loans are flippers, and that it's never based on there's income on that property while it's vacant. That's never been true. You never bought it with the intention there was going to be revenue until there was a profit check. So that's kind of a moot point. But we have lots of other loans where they're getting paid on somebody's rent. And so we have not had that be a problem, but that would be the problem area if you had it. Now, I guess I would approach that with a real, and by the way, okay, even me as a landlord, if someone comes up to me and says, I cannot pay, well, I'm going to see if it's legit. And if it's legit, okay, I'm a massage therapist. I literally am not allowed to go into the place until June. I'm going to be really understanding about that, especially if it's somebody that's been in my property for 2 years and paid all the time. I'm going to say, I don't want to go through the hassle of messing her up with an eviction. It's not right. It's not the right thing to do. Doesn't mean I have to forgive the rent forever, but maybe I can put it at the end somewhere, or we can play with it. I want the flexibility to treat somebody in that case like I would want to be treated. That's a difficult thing sometimes, because so you really are counting on that trustee income, just like those other people were counting on rent, and it doesn't happen. But I think the best way to think about it is, okay, let's try to be fair with each other, because this is probably a 90-day problem, not a year problem.
Well, like I said, that is my next question. My next question is, when do you think the virus will be over? When do you think the economic effect will be over? And is this going to send the U.S. into a recession?
Well, that one's easy. Yes. Yes, it's going to send us into a recession. How deep of one? Now, we did an interview with a gentleman that I respect named Raoul Paul. And the reason I interviewed him was because I heard him use the word depression. Mm-hmm. And I've listened to him for quite a while, and I never recalled him saying that. So when I interviewed him, I asked him, had he ever used that word describing what he saw about to come? and in the 90s or 2000 or anything, he said no. So, and I wanted everybody to understand that this is an impactful guy that just made a very impactful statement. So is there a chance we have a Great Depression? And again, is it statistically possible? We're thinking, if you're thinking about the 29 to 39 Great Depression, that was a decade. Could that happen statistically on fast forward? The answer is it could. So could you have a stock market? I mean, it just went from what? I'm not a stock investor, but 30,000 approximately to 18.5 in about 10 minutes. It's felt like it went up like a rocket. Now it's back up to 23,000. There's a lot of smart people think it's going to head back down and test those lows or go below. There'll be a point where statistically that's a depression, and it would have been compressed in a very tight area. We may get to 20% unemployment. Is that Great Depression unemployment? Yes, it is. Did it take us 10 years to get there or 3 years? No, because we had unusual circumstances. So if we have a Great Depression or a huge recession, it came from a source that's, first of all, Grand Junction, remember, had what would be a localized Great Depression. The problem was you couldn't have national policies because it was one location, and nobody cared about Grand Junction getting a special interest rate or goodies from the government because they were one place. This is a national phenomenon, and we're rolling out all kinds of programs to help because it's all of us. And I think maybe that revitalizes the economy where we go eventually off the bottom and head in another direction. Because I get the sense that when people really start feeling comfortable again, that, okay, pretty much the disease is gone and it's on the slide way down, they want to go out to eat again. They want to resume their normal life. And if they can do it sooner than later, they'll give it a shot, you know?
Okay. Kirk, you got another question you want to get in
Yeah,
there?
no, I'm kind of on the same topic of depression. And, one of the things I've been thinking about is the impacts of what we've gone through over the last little bit, what the potential long-term income impacts could be. I'm thinking about the work from home. There's been significant pushes for people to work from home. A lot of businesses who haven't done that have been forced into that. And I'm curious what your thoughts might be on the long-term impact of people working from home, whether that could cause some jobs that existed to permanently go away, and how that could also impact the commercial office space sector, because I think we as a nation have been kind of forced to figure this out. How can some businesses continue to operate on a work from home basis, where that was something that they did never do? I'm curious what your thoughts are as to the long-term impact on as a result of those sorts of things.
Yeah, I had never really contemplated that, but you are correct. We have found out, okay, I can function like from home. We're doing a radio show that I used to go to San Bernardino and go to a radio station, and now I do it from the office. It's like you guys we don't have a meeting, but we're accomplishing kind of the same thing. So I think, yeah, there'll be some ramifications of that. And there could be, definitely you could have somebody say, well, I don't need to rent as big a space. Not everybody has to be here. They can be remote. That's a very, very likely possibility.
Yeah. The other thing that I've been thinking about a lot as well is, on one hand, I feel like as a nation, we have a short memory on things like this, where we can go through something like what we've gone through over the last 6 to 8 weeks. And once it all starts to clear up, we can all kind of forget about it. When 9/11 happened, that was pretty, it was a big deal. But, here we are, there's a lot of things about or the crash and everything that happened in 2008, there's a lot of that people kind of forget about. And I'm curious, whether it may be a hard one to answer about.
No, but I like that about us. I do. I like the fact that we're sort of like we're stubborn and said, an example I think I've used was the Boston Marathon bombing.
Mm-hmm.
At the end of the race, a bomb goes off and injures several dozen people, kills 3 people. It would have been a natural assumption to say, wow, that's going to really put a damper on the races going forward. And the next year they had 35% more people who basically said, screw you, we're coming to run.
Mm-hmm.
I like that about us. If we feel, now see, part of it is you're not just thinking about yourself though. So if I want to go do something, I really have to think about the health of my wife, the health of my kids. So it's not just, okay, I don't think I'm going to get it, so I don't care. You really have to think about, like Christina has somebody that's a husband like my age. She's constantly thinking about his welfare, so I'm not going to go do something. There'll be a time where we get over that, but I am not sure that's in the next few months for all people.
Yeah, I agree. I do think there's a lot of optimism as a nation. I think that's one of the reasons why we've been able to do a lot of the things that we've been able to accomplish as a people.
Right.
And it's an American strength.
It is indeed, yeah. And I think that will come forward, but we're just not thinking about ourselves right now. We are thinking about, wow, so everybody I see for the next 4 days, you actually have to think like that. So am I going to go to the baseball game and stand next to 20 other people in the hot dog line and run the risk of something? It's just going to be a while before we say that's safe.
Mm-hmm. So as a class of like real estate investors, I feel like there's a lot of optimism in our side. And maybe this question's already been asked, but I think I heard once that the Chinese character for crisis is made up of 2 words, and it's I don't know what the word is, but crisis and opportunity. It's basically there's like fear and opportunity. Where do you feel like in this moment there's opportunity for us to look at in our investing world? Because I believe that in the midst of crisis, there's always opportunity somewhere. It's just you might not be looking at the right place.
And it's probably the most legitimate thing we do in our business is provide for somebody's liquidity needs. So I don't know too many people that when this happened and you got kind of on lockdown, that you said, oh yeah, I've got oodles of liquidity. Well, I bet most people wish they had just a little more. So would you sell one thing wholesale to double your liquidity? That might be a very natural response. And that's basically what we do. Because we're not the owner occupant that has to have it all be nice. We're going to write a check. You're going to leave part of your equity behind because we provided a liquidity event for you and that fit your need. So that's the opportunity. Somebody legitimately wants to just strengthen their position with more liquidity, and you get a chance to provide a service and get a wholesale deal. Absolutely.
Mm-hmm. It's good.
Might want to call not expired listings, but withdrawn listings. Those people would raise their hand, they wanted to sell. Well, maybe they still do, but they just thought, okay, well, no one's a buyer right now, so I can't do it.
So
we had the question twice in the Q&A list. We had the question about where do you think the opportunities are going to be in the next 3 months, 4 months? Where do you think the opportunities are really going to be?
I think if you make yourself available as a buyer, you'll get the chance to talk to a seller that has to sell or wants to sell, has an urge to get some liquidity to make his life safer. That makes perfect sense. I've been on both sides of that fence. And I think that's what I love about our business is that it's a service. If I was going to sell a car tomorrow, I would take it to CarMax without the expectation of getting full price. It's not why I showed up to CarMax. What do I show up for? I get a check. I leave in a half hour. I don't have strangers coming to my house and driving my car. Perfect. That's the way I want to sell a car.
In the flipping part of Southern California, how do you feel like the market's going to be over the next couple of months? I mean, do you have any kind of sense as to the demand in resale?
Yeah, I think you probably will play catch up in a way. I think that people were frozen for a little while because they can't really go out. And you pull the property off the market. But I think there'll be interested buyers. And I think the interest rates will be very favorable. So I don't think real estate's going to suffer a great deal after we feel like we can show up to an open house or go see a property without feeling like, yeah, I better not do that yet.
Mm-hmm.
So one of the questions in the Q&A is, how do you, if we see a depression, and a depression by, last time I looked, the definition of a depression was 3/4 of negative GDP versus a recession, which is 2/4 of a negative GDP. If we see a depression, then how do you plan for that as an investor?
I don't think 3/4 of a year would be depression. I think that could be a long recession, but I don't think that's the definition.
I'll relook up my definition. So ignore my definition conversation and let me just ask the question, which is, if we're looking at a depression, an investment plan.
Yeah, if you really have a depression, well, think about when's the last time we used that word. When was that? 70, 80 years ago. It's a once in a lifetime event. That ought to get your attention. So you respect liquidity. You look for big opportunities that are very safe and realize the market may not be full of buyers, but full of very, very careful people protecting liquidity if you're talking about a Great Depression. I mean, and there are people that are really smart. Okay, Ray Dalio, you consider him a pretty smart guy? He used that word on a show a couple nights ago and said, we are going to have statistically a Great Depression. Now, and that's exactly what he meant. Will we reach the required percentage of unemployment? Yes. Will we have the decline in the stock market? Yes. Will it be in a time frame very different? Yes.
Interesting stuff.
I see you again.
Yeah, the thing about the depression, I don't know. I do feel like I'm an optimist. It feels like we've just kind of been on a pause. It would have to be a bunch of dominoes that fall down and businesses that can't get back up. Which obviously, there's plenty of businesses that are at risk. But once people can go back out, I think maybe there'll be a slower ramp back up, but I don't know. It feels like the underlying fundamentals of the economy are strong, where if we were in a weaker position, it might be a bigger one. But, I'm not one of those other big name guys.
Well, no, but I mean, I think what I like about a Ray Dalio is he doesn't have an answer he has to come up with. He contemplates it very carefully, as does Raoul Paul. So that's what's the most likely outcome is where they try to land. I think they probably inside of that thought is they don't see this coronavirus being one and done. And then it's a game changer.
Mm-hmm.
If we're in November and we have a resurgence and we have 2 million people, have this stuff worldwide, and that'll be a whole bigger problem.
Mm-hmm. So I'm sure there are many people who are listening to this that are trying to weed through all of the things that we're talking about, trying to see where's the safe place to put their money in this situation. So what are your thoughts there?
I personally would love, I like liquidity and patience in this type of setting.
Mm-hmm.
I don't feel like I have to do anything. If something came up and I thought, wow, that's exceptionally good, that's I guess what I would want to put myself in that type of a position where you realize, okay, that's an amazing deal, and it's there because of circumstances are unusual, and I'll take one.
So be patient and conservative.
Yes.
Yeah, I agree. I agree.
So one of the things we've gotten is a hard money lender. Have you changed, or are you expecting to change your terms for flippers in terms of perhaps higher down payments, lower ARVs? In fact, are you currently still lending? I've noticed that some of them have paused altogether.
Which has been delightful because we've gotten a lot of phone calls because of that. No, we're still lending. And we have very similar programs. I mean, Craig is the one that typically takes those phone calls. And it depends, I suppose, on the inventory that he's talking. But I would say within 5%, we have exactly the same programs we had before. And some of those rules are dictated by the people that have the money. So if they rein in what they're wanting to do, then you respond to that as a lender. But by and large, we have the same programs, but we have had large competitors leave the space.
Somebody asked in here, in a time like this with coronavirus, do you have any recommendations for how to find good renters for vacant units right now?
Wow. I hadn't thought of that one, to be honest with you. I don't have any specific thing on that. Sorry.
No, that's okay. I'll just say I had a unit that I had somebody offer to pay me the first 2 months rent up front. And I went ahead and took that.
They wanted to induce you to say yes. That's
they wanted me to say yes.
okay.
And I did.
Okay. Well, there you go.
So I guess that's maybe an answer. If somebody offers it, I don't know how you could twist that arm, but made me feel good.
It sounds like the market is almost the reverse, where they came and said, well, I'll take your place if you only collect rent every other month.
Yeah. Yeah. Well, it made me feel good that I don't have to worry about rent for at least 60 days.
Yeah.
So.
All right, so this one, Bruce, may not be right up your alley, but let me see. So we have a lot of Chinese buyers in the Pasadena, Altadena, Baldwin Hills area, right in this area. And so, what about world relations with China and the that we've been seeing going in and out, and the fact that they hold our treasury bills? How do you see that unfolding at this point?
Only small questions to deal with tonight, huh?
You're Bruce Norris. I am not going to ask you small questions, Bruce. I'm sorry.
Oh my gosh.
And you talk to people who know big things and have big ideas. Don't you specialize in that?
Yeah, I listen to people that are much brighter than I am, that's for sure. And
Me too.
some of the things they've been saying about that has actually been really aggressive. That what the communist Chinese government did was literally an act of war, and they should be charged with crimes against humanity and fined a lot of money, maybe even equivalent to our entire debt. So I think there's some ramifications. I can tell you one thing that we probably all would agree on. Wouldn't we like to have our own manufacturing of medicine back in our own country?
Yeah.
Right. Yeah.
I mean, you're going to have stuff like that occur to people and go, are you kidding me? They could say no to that. Well, let's don't do that anymore. So I do think this has some long-term ramifications about that. I really do.
Would you, I mean, I've thought about that as well. Do you think that we're going to see a shift of manufacturing back to the United States, at least a portion of the manufacturing brought back to the United States as a result of this?
I think yes, but also other countries other than China. So I think there'll be plenty of reasons to say, okay, we'll do it outside of our country, but I bet China is not the favorite landing place for that decision. And maybe for a very long time.
What do you have any thought as to where that manufacturing would go outside of China?
You know, it's really not my expertise. I know Vietnam is a place that's getting a lot of that, but it's out of my ballpark for sure.
Mm-hmm.
Yeah, I know Japan's paying companies right now to move anything that they have in China out. And I don't know a lot about it. I've just heard, again, this is outside of my ballpark as well. I don't know a lot about it, but I do know that other countries are trying to bring manufacturing back home. Like I don't remember the number, but somebody in the chat box might know the number, which is what percentage of our pharmaceuticals is made in China is some like 80% or something like that.
Yeah, I thought it was over 90 actually.
Well, see, there you go. Okay, I chose a conservative number because I couldn't.
Well, I chose what I heard and I could be wrong, but that's a scary number even if it's 80, right?
Right. It is scary.
And what if you
scary.
call up and say, can I have some? And they go, no.
No.
Yeah, that's not good.
No, it's not good.
Right. So in our chat box, we had, I thought, an interesting suggestion. Let me see if I can get back to it, my chat box. So a suggestion was target the essential workers, nurses, doctors, law enforcement. You know, if you're looking for renters, to target those. Also, you know, there's a question which is, you know, what type of investments can we get into in California when the shelter in place is over? What would you suggest?
I need to hear that one more time. There was a little bit of disruption.
Yes, probably my
What type of investment in California?
Yeah, can we get into in California when the shelter in place is over? What do you suggest?
This is going to be a little bit of an indirect answer. I am not a big fan of California right now. And I'm not trying to be negative. Migration is a very important thing for a state. I would bet in the next decade, California's net migration from all sources will be negative. It means the only growth they're going to have is birth over death. So you're going to have a 1-day-old turning to a 10-year-old in the next decade. The adults will be leaving to go somewhere else. So when you have a state that literally has, right now it has about 90-10, it's going to go to 100-0 for population gain. I want to be on the opposite end of that. So in Florida, and that's why I'm there, in the next decade, they'll probably be, they already are at 85-15. They probably will be 95-5 migration of adults instead of birth over death. So almost entirely, and they're, by the way, they're like number 1 and number 2 in migration of domestic and migration of international people. But the people that they gain are adults ready to rent or ready to buy something. When you have a kid, they're not ready to do much for what, 30 years? I'd rather have that migration any day. So I guess I would contemplate what I did. I didn't stay in California with a lot of my assets.
Let me ask a question about the demographics of the people that are moving to Florida. Is it all ages, or is it primarily retirees, or is it a good mix of both?
Well,
working age people and
yeah, there's a great stat, and I wish I had kept the report that I read in, but here's the multiple that happens. So when you're 65, you have 2 medical people in your life. When you're 85, you progress to 7. So think about that. If you have a senior in Florida, they're going to get outpaced by a 3.5 times multiple growth of somebody that's taking care of them. Mm-hmm. Different fields. So to answer your question, a lot of your migration are people that are in the medical field. I don't have one late payment in Leesburg for rent. Why? They're all nurses. Mm-hmm. So that's, the state of Florida has about 20% seniors over 65. That's the percentage. Highest percentage in the country. But again, that multiple assures they're going to get a lot more migration of young adults to take care of them.
And you would see that going on for the next 10 to 20 years?
Absolutely. New York, think about the people in New York that are going to decide not to stay in New York because of what just occurred. Have some space instead of being on top of each other.
Mm-hmm.
New York is the biggest sender of people to Florida, and along with New Jersey. And if that happened a lot the year before last, it's going to happen a ton going forward.
Yeah, that makes sense. Somebody asked about the rising sea level effects in Florida.
Florida's too humid. I saw that.
You don't have to live there, right? If you invest.
You know, that's true, but trust me, it's been on my mind. But it is muggy. About the rising sea levels, I don't really have. I'm certainly not familiar enough with climate change. I'm not sure I land on the same space, but there are some tide things that happen in Florida that are, if you're in the wrong area, you certainly have to deal with that. So I guess you have to be careful and not be in those areas that are known to have those issues. You know, it's funny. Over the last 60 days, 90 days, I haven't heard much about climate change. Definitely been on the back burner.
Mm-hmm.
got taken over by other topics. So
one thing I've actually heard about Florida is sinkholes can be an issue. Do you have?
Yeah. I mean, you kind of know where they are. The areas are prevalent.
Uh-huh.
So you can definitely stay away from them. I've owned my share of flips in Florida. I've never encountered, oh my gosh, I got the lucky house and had a sinkhole. I've had Chinese drywall. That's expensive.
Mm-hmm.
But I've managed to stay away from sinkholes because it's kind of known in the area. That's a problem.
Okay.
We do have another question, which is, do you think the Florida market will continue to hold its value?
Yeah, I do, because let's say you have a $230,000 new house and your interest rate's 2 3/4. Your payment's about 75% of rent. I'd like to know how that's going to go back to the bank in droves. I really would. And by the way, if the country wants to have no foreclosure rate, all they have to do is temporarily say all loans can be taken over subject to, end of story. No foreclosures.
Mm-hmm.
How many of us would take over a full price loan at the owner occupied rate of 3? A lot.
Yeah.
Yeah.
That's
sure.
a really simple solution to solve any foreclosure glut they think might occur.
So somebody asked a question about universal basic income.
Yeah.
And with the handouts that the government's been giving the last little bit is kind of an interesting, maybe precursor to that. Do you have any feelings as to whether that is something that would be seriously considered by the government?
Yeah, I certainly would hope not, and I doubt it. But yeah, maybe I can understand somebody's point, and somebody on the recipient end perhaps saying, well, I could get used to this, but
Mm-hmm.
I hope they don't, because I don't think that's at all a good idea. It's, you know what, again, going out a little further, Sean O'Toole's a very smart man. He and I, usually when we go to the I Survive real estate event, we go into the limo, and I got him alone for an hour, and I get to ask him, okay, what do you see next? And here's one of the statements he made. I would say 10 years ago, he told me there was going to be self-driving cars, and of course I thought he was full of it. But somewhere in there, he said that America's biggest challenge is how to have society where 50% of the people don't have a job. Wow. Okay. So that was an interesting statement. And the other thing is you do have technology that's making a lot of progress. So that tends to be less people, right? I mean, you have robotics and all that, and at different levels. What do they call where it's able to do research? So if you're a medical doctor, what is it called when you can have a computer just read every report ever written about cancer in about an hour and get the conclusion? That they're starting to do that. Lawyers too, if you need to study caseload, that can be done by a computer. So there's some things like that are going to definitely take away jobs. So maybe Sean's right. Maybe we get to a point where, wow, there's a lot of people need to be employed. I don't know how that works on the budget side. I don't know how that works.
Well, the hard part, in my thought, the hard part, we went from having where 50% of the people worked and 50% of the people stayed at home. That was before the war.
Stayed home, yeah.
Stayed home. 50% of the people stayed at home. That would be called the wife, generally, traditionally.
Yeah.
Right? We saw this huge economic change when it became a two-working household. The question that was a positive change. It's the reversal of that, right? Where 50% aren't working because the job is there. That's what's so painful, is the contraction, not the expansion.
Yeah, and I think too, most family budgets kind of are based on we're going to have two incomes, not one. So it's a little hard to get that home qualified for and have all the goodies you want. So
yeah,
everybody's complaining about, look at this list. I lived in Florida for 7 years and I would never go back. Very large bugs.
Sorry, I can't, we let them chat away. We encourage them even to chat away. So it's 8:45. So, officially we're supposed to close pretty soon here. So to kind of bottom line, I think what you shared so far is, how will the market hold in 2020? Do me a favor and answer it with, if the coronavirus is here for a short time versus if the coronavirus is here for a long time. And how do you see that unfolding economically and into real estate?
I think if it's literally one and done, as it gets off of our mind and we gradually return to normal, probably by spring of next year, we're off to the races. Got a great interest rate and things start improving and unemployment gets better. When we get into winter, you have a second round where we're doing exactly what we just had to do, spend 60 days or more in isolation with masks on. That will be a pretty ugly thing to cope with. And
what do you think that'll look like?
I think it'll look just like it does now. Only it'll be worse in the sense that we might also think, wow, this is the new normal. Right? We're not buying that. We're buying that the new normal is we gradually get back to normal. But in November, December, we have to wear masks and we're camped out for 60 days and we're not going out again, all those businesses that rely on all that stuff being normal, I'm going to go to the restaurant, I'm going to go to the ball game, the theater, the movie theater, at the play. I mean, if all of that's put on hold for another 60 or 90 days, that is a big hit. So those are two different worlds.
Okay. So there's one more question. With the stock market on its way back to pre-COVID-19 levels, do you think that we may escape this recession depression? Basically, I think it's just kind of a repeat of what you just said.
Yeah, I mean, there's much smarter people than I about the stock market, and most of them are talking about, no, you haven't seen the lows. You'll revisit the lows, and you will get past the lows. So there's a lot of people that do understand that world, and they are not thinking that it is time to celebrate and go all in.